Welcome to yet another YouTube video. Today we'll be going through a trade we took on AUD the previous week just after the CPI event. But before we get into it, ladies and gentlemen, please like and subscribe as that will motivate us to continuously post more content. Also, if you're looking for a pro firm to trade with, I recommend the Forex Funder, which is currently giving 50% off on all evaluation accounts. You'll find the link in the description down below. Without further ado, ladies and gentlemen, let's dive into it. So as we said, we'll be looking at AUD. We'll be starting our analysis from the weekly time frame. Right off the bat, we can see we had an order block right over here, which the market traded into. There we go. Then from here, we'll be diving to the daily time frame. Right. So on the daily time frame, what we'll be looking at is this range over here, from that high to this low. So the area over here under the 50% is called the discount area, and above the 50% is called the premium area. So if we're looking for a buy, we'll be looking to buy from the discount area, and if we're looking for a sell, we'll be looking to sell from the premium area. Right. So right over here we can see that the market just spiked below this previous lower low. This previous low, that will be our sell side liquidity. Then from here, as we said, we'll be looking to find entries within this range, and we can see right over here we had an order block in the premium area. Let me do this. In the premium area we had an order block, and then again we had a fair value gap from here to here. Right, we had a fair value gap from there to there. Let me annotate that, and there we go. So from here, remember, we'll be looking at the entry on Wednesday just after the CPI event. So from here we'll be going to the 4-hour time frame. Right, so on the 4-hour time frame we can see that the 50% discount and premium area is right over here. So we can just take our fair value gap and place it over here, because we also have a fair value gap on the 4-hour time frame from this candlestick's low to this candlestick's high. Right, so from there, and remember we had an order block over here. Now we can refine that order block based on the 4-hour time frame and use this up close candlestick. Right, let me delete this. So just before the CPI event, we had quite a few number of things. Firstly, we had a market structure shift over here. Right, we had a market structure shift. We also had an order block over here. Now this order block is not just an order block, because we also have a fair value gap. Let me just do this first, then I'll show you. It is an order block plus fair value gap. Why am I saying that? I'm saying this because we also had a fair value gap over here, which underneath we also had the lowest selling candlestick. It was an indecisional candlestick, but we can also say it is an order block. Right, so going to the 1-hour time frame, let me so Wednesday open over here. What happened was that immediately after the open, this is the midnight open price, right? So immediately after it opened, it just consolidated over here, and then when the event came into play, it spiked to the upside, but eventually it sold. Where did it sell into? It sold into our order block and our fair value gap, right? So after seeing this, we expect the market to buy, but we just don't buy because it hit our order block and our fair value gap. We buy because we have to see a probable setup, right? We just don't enter. So let's just go to the 15-minute time frame. So on the 15 minutes, we can see that, right, the market consolidated over here, and this spike was just a manipulation. It was just a manipulation. So using the power of 3, we have consolidation, right, manipulation, and then what we'll be looking for as a market structure shift to the upside. We had one over here, right? This is on the 15 minutes time frame, mind you. So right, we had a market structure shift. Then what we also have is this order block. Now right over here is where we found our entry point. Now before entering, we'll be looking at our targets. The first target would be here. Why? Because we had failure swings. This low, we had a higher high, and then we had another higher high. Then it came to make a lower low, a lower high, and then another lower high. So this will be our liquidity. Now we have to aim at reaching the peak. Also we had this area over here. So let's go back to our entry point. As I said, we had this order block over here. This is where we found our entry point on the 15 minutes time frame. This is where we entered. Our stop loss was like over here, right? As I said, we were aiming for this buy side liquidity. Alright, so let me just go to the 5 minutes time frame just so we can better understand why we took the entry. Now remember, on the 15 minutes time frame, our order block was over here. This was the high of our order block, and also on the 5 minutes time frame, we had a fair value gap right over here. So this was just confluence, really. It was just confluence. Fair value gap. So this setup was probable. That's why we entered. But let's say you couldn't enter on this entry point. What you could have just done is to wait for another entry point. So over here we had an order block, right? This could have been your entry. But how we trade is that we trade within sessions. So this entry we wouldn't have entered on this trade really. Hence we entered this trade. Right. So as you can see, upon entering our trade, our stop loss was over there. Upon entering, it bought and it retraced. Now it bought and retraced, but then remember, our target was this buy side liquidity. So we just held the trade, But after it broke over here, what we did was we took the stop loss and placed it just above the entry point, just above the entry. So it was just a, if it came and hit our stop loss, it would have been a break-even trade. But luckily it didn't. It just retraced up to this, down to this auto block, and from there it bought and we hit RTP. So there you go, ladies and gentlemen. That was our recap on the trade we took last week on AUD USD just after the CP.